I want to start this video by a great message. The moment you realize the world is run by people who are no smarter than you, everything changes. This is not my regular video, and this is this kind of video where I explain everything which I learned. Before we get started with this video, why am I even making this video?
देख, मैं हिस्ट्री बनाना चाहता हूँ और हिस्ट्री ऐसे ही नहीं बनती, लोगों को साथ लेकर चलना पड़ता है। मैं 100 ऐसे लोगों की सेना बनाना चाहता हूँ जो अपना 100% देने को तैयार है। फिर अपन 1001% हिस्ट्री बनाएंगे।
Listen, first things first, everyone wants money and everyone needs money. And especially if you are a college going student, that need tends towards infinity. And if you are someone like me, you just go to the Google or YouTube and search how to earn money as a full-time college going student. And then you will be suggested with thousands of videos where every single person talks about the same thing. Freelancing, affiliate marketing, investing, internships, starting a YouTube channel, and I'm sure you might have watched those videos. But they didn't work for you, right? And probably that is the reason you're watching this video. And if those videos did not work for you, so why are everyone still talking about the same things? How did you go wrong? And how the hell can you actually make money as a full-time college going student? You can make more money than your parents while you are still a student. I'm pretty sure most of you never wanted to know about how to make it. Here's why. You thought of buying a Lamborghini or Ferrari while you are in school, BMW in college, and now you're dreaming for a job with any simple car. Do you know why did we change our dream of buying a Lamborghini to any simple car? Doesn't matter what goals you have. The end goal of everyone is same. How do I become financially free? How can you become the person who can live as you want, work when you want, travel where you want? I mean, man, what do you want to do in your life? Nowadays, you see people where they work their ass off every single day and make videos telling others what to work hard every day. You don't need to work hard, you just need to be smarter enough. And one such smart thing is having financial knowledge, an ability to know about money and how it works. The single most powerful asset we all have is our mind. If it is trained well, it can create enormous wealth. Let's get started. Stock market can make a poor person rich, and at the same time it can make a rich person poor. In this video we will be knowing the basic understanding of stock market. By the end of this stock market series, you will be able to invest and earn profits. And most importantly, you can become financially independent. You have to be clear on these two things before you understand about stock market. Greed and fear. When you buy a share and see its price steadily increasing, it's easy to get excited and become greedy, hoping for even more profits. But suddenly the share price drops. Even then you might hold on, thinking it will rise again. Instead, it keeps falling, leading to fear, and you end up selling at the lowest price. After you sell, the share value starts increasing because more and more investors buy now, the low price shares. As more people buy, the value goes up. The overall conclusion from this is clear. We should not buy a share just because we think its value will increase, and we should not sell a share just because we see its value decreasing. If this is very clear to you, we jump to the next part. What is Demat and trading account? Demat account. This is used to hold shares in electronic form, eliminating the need of physical certificates. Trading account. This is usually used for buying or selling shares. Now let's understand what a stock exchange is. It's a place where buying and selling of stocks occur. If you want to buy shares of any company, that company must be listed on a stock exchange. The first stock exchange in India was established in 1875 and is known as BSE, Bombay Stock Exchange. Currently 5,309 companies are listed in BSE. We also have another stock exchange called NSE, National Stock Exchange, with 2,266 companies listed. Both of the stock exchanges are located in Mumbai. NSE was the first to introduce a fully automatic electronic trading system, making buying and selling shares faster and more efficient. Both NSE and BSE have the same trading mechanism and working hours, usually 9:15 am to 3:30 pm, excluding Saturdays, Sundays, and public holidays. These two stock exchanges are under the control of SEBI, Securities and Exchange Board of India, which implement the rules and regulations of stock exchange. You can explore more about NSE and BSE by visiting their websites. Have you ever heard about Sensex and Nifty while listening to the news? What do you understand by them? Basically, Sensex and Nifty are indicators showing the profits or losses of top companies. For BSE, indicator is known as Sensex, which usually includes the top 30 companies. For an NSE, the indicator is called Nifty, which reflects the average profit or loss of top 50 companies in NSE. Let's understand what the stock market and shares are. Stock. It's nothing but partial ownership. For example, let's consider a company called ABC. If this company wants to expand its business, it needs a lot of money. So it has two ways to get that money. Either it can take a bank loan or it can enter stock market. But not everyone takes loan due to high interest rates. I will make it clear with an example. Suppose the company needs 1 crore to expand its business. It divides this 1 crore into 1 lakh parts and sells the shares, with each share priced at 100 rupees. If someone with 10,000 rupees buys 100 shares at 100 rupees each, they now have a stake in that company, both in profits and losses. You might be wondering how the share values increases. If many people like this person invest in the company, it expands its business and capital. If the company succeeds, the invested 1 crore becomes 2 crores. Now each share value will be worth 200 rupees. If the person who invested 10,000 rupees sells these shares now, they get a profit of 10,000 rupees. Conversely, if the company fails, the share price may decrease to 50 rupees, resulting in a loss of 5,000 rupees. The key takeaway is that making profits can be simple, but getting into losses can be even simpler. By the end of this video, you will learn how to decrease risk while maximizing profits. It's very important to know about the company before investing in it. There are two ways to decide whether a company will give profits now and in the future: fundamental analysis and technical analysis. Let's start with fundamental analysis. It's the basic and best way if you're just starting out. This helps you invest in companies with strong fundamentals. To perform fundamental analysis, we need to examine three things: balance sheet, income statement, cash flow statement. Balance sheet. This contains assets, liabilities, owner's equity. Assets. These are the things of value owned by a person, business, or organization. In simple words, it's the wealth that generates money even if you don't work. We need to choose a company with more assets. Liabilities. These are the things a company owes. Usually a sum of money like loans and taxes. We should not choose a company with high liabilities because even if it makes a profit, most of the money will be spent on repaying those liabilities. Owner's equity. This is the amount of money the company has made after selling all shares. This money is usually spent on business expenses. Income statement. It shows the net income of the company. Total revenue minus expenses gives the net income or final profit. This net income is used in two ways: either paid out as dividends or reinvested in the company. We'll talk about these dividends in the next video. Cash flow statement. This shows how the net income money is spent, either by investing in other companies or on company operations. You can find all these details on the company's website or other websites like moneycontrol.com, bseindia.com and nseindia.com. Start with fundamental analysis and then move to technical analysis. Technical analysis. This method predicts the price of stock based on previous data. It helps to determine the best price to buy and sell stocks. There are several factors to consider in technical analysis: trend, support and resistance, and technical indicators. Let's understand with trends. The direction of movement of share value. There are three common trends: uptrend, downtrend, sideways. Uptrend. Series of higher highs and higher lows, indicating the share value might increase. Downtrend. Series of lower highs and lower lows, indicating share value might decrease. Sideways. Series of highs and lows with the low probability of profits or losses. Support and resistance. Support. The price level that a stock usually doesn't fall below. If it crosses this level, the share value may decrease drastically. Resistance. The price level that a stock usually doesn't go above. Once it crosses this level, it may increase rapidly, giving huge profits. Technical indicators. These are most commonly used by day traders. One important factor is the 50-day moving average, which is average closing share value over the last 50 days. If stock price is greater than the 50-day moving average, it may be a good time to hold the stock. All this data is available on the company's website. I hope you got an idea about stock market. These are some of the basic terms in the stock market. In the next part, we will discuss what are mutual funds, what is a brokerage, what is an IPO, what are dividends, what is short selling, what are penny stocks, and do let me know in the comments if you had any doubts.